The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
If you're building or buying or selling a home, the Real Estate Crew's got news for you at the Real Estate House Party.
With attorney Rick Carter,
Real Estate House Party.
paralegal Kathy Holtshouser,
Real Estate House Party. Come in, have fun.
and comedian Tony V. Now, here's real estate attorney Rick Carter.
Oh,
Are you awake?
it's a little slow in the real estate market.
Yeah.
lately.
This is the first time that we all have tans.
We have all
because
good
we usually
tans.
work our butt off through all the summer months,
But the rates are up and up and up.
Yeah.
and the
So-
prices are up and up and up.
And
So does that slow things down?
slowed it down,
Slowed it
down.
I don't sleep at night. I go to work and sleep.
Yeah.
You know,
Yeah.
I was told in October you better plan some vacation time.
I just planned one.
Oh.
I just planned one.
Yeah, when you hard to get Kathy to get a vacation. Work.
Oh God, she's like the seven dwarfs off to work
Yeah.
every morning.
Yesterday was today Tuesday? I don't
Today's
even say.
Tuesday.
So yesterday, Rick called me, or I called him on the way to work, and he goes, "What are you doing?" I go, "Well, I'm driving to work."
Sure.
And he
Oh,
goes,
there's a
"I
roll
didn't."
of the dice, Ed Sullivan. You know that. It's your fault.
I said, "I didn't know I had the option." He goes, "Well, you haven't been showing up on Mondays." And
Well, I was a little bit more polite than that, and but you did say you might take a couple Mondays off, and that usually means 52. so here we are.
and then I walk in the office, and Judy says, "Oh, I just checked your emails. I didn't know you were coming in." I was like, "This is
How pathetic
perfect."
is that?
That's who runs that place?
Imagine
I
if you,
don't know.
Imagine if you were a comedian,
Yeah.
and every night you were booked, and then everyone was so surprised that you showed up on stage. That's what it's like. Oh, Tony,
Well,
B,
that
you're,
is
you're
that is
here
me.
tonight.
That's
Oh,
me.
I know. Well,
That
you're a
is
bad
me.
example.
Yeah.
And the most
Yeah.
amazing thing is I keep getting money in my paycheck. I keep getting money in
Well,
my
the
checking
most amazing
account.
thing is I keep you doing the books.
Yeah.
So welcome.
Who's wrong is that? I know.
Why mess with a perfect system? Well,
No.
you're doing better than.
Oh, wait a minute. Let's introduce you before
No,
we
you
start.
haven't even welcomed our guests.
Welcome, and thanks for joining here as the Real Estate House
House
Party.
Party.
Thank you very much, and we are honored today. We have the Iceman back.
I know he
We have-
doesn't. He doesn't look like he works either.
Evidently, you're doing mortgages.
I am.
Your tan
Or
looks
you
very
were.
nice. This is John Marroni from. I think you have a new place of employment since you last been here, haven't you?
It's Draper and Kramer.
Draper
Yay.
Kramer.
Yeah,
I know.
it's been a year and a half. Yeah, because last time I was here was pre-COVID.
Yeah, so that's.
Are you kidding me?
Yeah.
Yeah.
Yeah. A few years
Wow,
ago.
it feels like
Feels like
yesterday.
yesterday you were telling us the crab story.
Well, I'll finish. It's still going.
No. No crab story today.
I'm glad you saved my seat for me, too.
No one's been in it since then.
No.
That's just yours.
That's right.
So we like Draper and Kramer.
Yeah.
You guys are great to work with.
Absolutely, yeah. No, the CEO, he still writes mortgages, too, so he gets it. You know,
Really?
Yeah.
Yep.
Good for him.
You know, we just likes to close loans fast.
Yeah.
End of story.
End of story. That's it.
We like that too.
All right, well,
Yeah.
thank you for joining us.
I can make it. Wait.
Are we
I
done?
can talk
Are we
about-
done? Oh, no.
We can talk about crabs if you want me to drag this story out. The crabs in a bucket.
No, let me just throw out what I think is going on in the economy. You let me know if I'm inaccurate or well, you don't have a crystal ball either, but I am told the Feds are meeting again, end of the month.
Okay.
Rates might go up with the Feds about 3/4 of a point.
That's huge.
That's huge.
What?
Huge.
Now, so that's why I'm giving a little disclaimer, because don't get nervous about that, because the rates already have factored that in.
Right.
Yes,
So
they
they
have.
already think it's going to go up 3/4 of a point. So as long as it doesn't go up more than that, then rates are going to stay steady or maybe even bounce down a little bit.
It depends on what he says after. It's all about his position.
wording?
Yep. Yeah, because everything's all based on
His,
future.
his exact
Yeah.
terminology. That's how my office is. They waited bated breath on how I phrase things, and then they go from there.
And then I say, don't talk to me like that. Don't you dare talk to me like that.
So if he says if he coins a word or two differently, then
Yeah, because I remember back in the day with Alan Greenspan, they said if he carried his briefcase in his left hand it meant he was
Oh,
going to
my
be a little
God.
more
Oh,
hawkish.
for the love of God.
Who figured that out?
The guys on Squawk Box, they were just
yeah.
kind of they're like, oh, he's going to raise rates. Look at he's carrying on his left hand. He's being hawkish today.
So has the real estate market hasn't dried up though? Like the rates, people are still buying.
Well, yeah, because the inventory,
Still have an inventory problem.
the demand is still there,
Yeah.
especially inside the 120, actually the 495 belt.
Yeah.
It's always been about how people feel about their jobs, period. Because
Yeah.
you think about
Kathy,
it,
how
right?
do you feel about your job?
I love my job.
Great job.
Tony, how do you feel about your job?
I love my job.
All right. John?
John?
Same thing.
Okay,
I don't
all
have
right.
a job.
How do you feel about the beach?
Yeah, I just give away money for a living. That's all I do. You know, it
That's
comes
a
with,
great job.
but it comes with a catch. You got to pay it back.
Right.
You know what's funny when people,
More of it.
Yeah.
You got to pay back more than I give you.
Yeah.
That's right.
That's what the hitch is.
Tony's
You-
coming a long way in
Yeah.
our.
you give away money at closing. I am surprised when someone comes into a closing and they go, oh my God, how many forms we have to sign. But a
Yeah.
bank
You're-
is giving you
$700,000
$500,000 or $700,000. You might have to sign a couple
Yeah.
forms.
Especially the one where you sign, you are who you say you are.
Right.
That's my favorite.
There's a lot of that going around.
Yeah.
Is there a lot of imposters?
Yeah.
Oh yeah. I like the form that says "Do not commit mortgage fraud."
Oh, that's a good one.
That's a great one.
Do you,
I
could you
like,
get,
I like the form at the end where it says, sign this paper, and if we forgot
If we
anything,
screwed anything
Yeah.
else up,
it's
you'll
fine.
correct it.
Yeah.
the compliance
Right.
agreement?
But
Well, the
you-
best is when I have clients that they try to be creative, and they'll say, you know, can I just say? I go, you can say anything you want. Doesn't mean you're going to get the loan.
Well, that was the no doc programs
Yeah.
that were very
Yeah.
popular.
Right.
I love those.
Yeah.
You can just make up an income, make up your documents, make up your job.
no
pretty much.
income, no asset
Yeah,
verification.
Well, the true no doc is you didn't state an income, you didn't state
Right.
any assets, and you didn't even state that you had a job.
Right.
Pull out a mirror and say, just fog this. And we're going to have you do this at closing too.
Yeah. And there lies the problem
Right.
of the old
The old one,
recession.
right,
of,
right.
So that's what got us in trouble in 2008. So we're thinking
Yeah.
for this little downturn, we don't have that same
No,
problem.
well, 2008, not many people had equity in their homes because
Right.
people were taking out those line of credits for 135% of the value of their house.
Right.
I mean, you probably haven't heard the word short sale for a long time.
Yeah.
Nope.
Oh no, thank God.
No,
Is
no,
that
it-
because of regulations were
No.
put in
No,
place?
because people have equity in their
Oh,
property.
'cause now people have.
Yeah.
Yeah, a little both. Yeah, I think they try to control it a little bit.
Like,
But
when the short sales were popular, it meant you owed more on in your mortgage than your house was worth.
Sure.
So
Yeah.
people said, "I'm not paying this back because." At the end of the day, they have you know what I mean.
Right,
Their house
right.
isn't worth what
It's
they
not
just
worth
paid.
they say. Right. I can pay this off forever. And I'm not going to get it back.
Right.
well, sometimes we repeat ourselves on the show, and sometimes we completely leave things out. So we're hoping that offsets a little bit. But
What did I leave out?
No.
What did I say wrong?
I think
No.
we've said this a million times, but when we first started out, every loan was 80%. And I was going to ask you about mortgage insurance in a second. But so 80%, so by definition, there was always 20% equity in it. Then it went to 90%, then a 95%,
97.
then a 97.5, and then it was turned into a 100%
100%.
loan, and then it turned into 103%. You could not only get all of your loan and closing costs
Yep.
all paid by the lender.
Or then there was
Who would
a-
have thought that would go
That's
wrong?
great.
Right,
yeah, right.
So by
then
definition,
they
you would have
did-
nothing to lose by backing out and walking away.
No,
So-
because everything you didn't.
You didn't put anything
you
into
didn't
it.
Put a nickel
Right.
in
Or
it.
like the negative EMs, right?
Yeah,
Those are a
those-
disaster.
Those-
What's
that-
that?
Well, that's
now?
because-
So
Negative
So
AM.
what's a negative AM?
Go ahead.
Was it Stump the DJ? Sure.
Oh no.
Yeah.
Well, I'll do it. I'll do it.
No, I'll tell you. It's when you're paying less than interest only.
Yeah.
That's the option that you had, and
Yeah.
the interest would start accruing on the back. So it's like negative amortization.
So if you borrowed $100,000 and you're selling it a year later, they'd say, "All right, what do I owe?" Well, you owe $110,000.
Yeah.
Right.
Right.
But
Or
you weren't.
whatever.
But it wasn't that small of a loan.
Right.
Typically, the
I'm
negative
making an
EMs.
example for our
Right, but usually the negative
listeners.
EMs were higher priced homes that people couldn't
Right.
really
well,
afford.
and it was sold. It wasn't explained to people properly, or they didn't listen properly. Because it
no,
was
they
actually,
only hear what they want to hear.
It was
mostly.
an awesome cash flow management tool, And they said you have an option of making your regular payment. You could do interest only, or you could do less than interest only at a lot lower. All they heard was that's going to be their payment forever.
Less, yeah.
And then that was for people that had like a projection of really good sale, like a projection of having your salary double in like 3 or 4
That's right.
years.
Get you into the house.
Yes.
If someone knew they were going to get a big bonus the next year, then that interest that accrues, they could
just
pay it down and get that tax write-off.
So what's the difference of that and a balloon payment? What's a balloon payment?
So balloon is, let's say it was a 30-15 balloon. That means it's amortized over 30 years, and then in 15 years, whatever the balance is.
It was all owed.
All owed. So they either had to come up with the money. If
Which
you
they didn't do.
Yeah, refinance. If you couldn't do that, then you'd have to sell the house.
Yeah.
Right.
Yeah.
Period.
But the refinances are pretty much gone, right?
For the most part, we're down to the numbers last month were 6% of all the loans are refis right now.
Wow.
Yeah.
Dropped way down.
So anybody that
And why is
hasn't
that?
because the rates
Oh,
are
because
high.
of the rate. Oh, I got in at the right time.
You got it the
Everyone
right
did,
time.
yeah. And the thing is, if you miss the boat, you can't. You know what I mean?
I
Like
see,
most
yeah.
people have under 5%, right? Would you say a lot of people?
Yeah. So people will either, if they really need cash and that's their only option, is to refinance, or if they want to buy someone out for a divorce, which we'll talk about today.
Yeah.
Refinance.
Lots to
and-
talk about.
You get divorced?
Not now. No.
No, not today, right?
This is a weird place to bring it up.
I hope she's not listening.
No one listens to us anyway.
No,
I guess if you got to get it out, this is the place.
I like this one.
So you'll keep her for a little while.
She's a keeper.
All right.
So the other option these days is, and we'll talk about this for a quick second, adjustable rates.
Yeah.
Seems like everything we're seeing is an adjustable rate. But I think before we get on to all your stuff, we'd probably like to say adjustable rates aren't always the same type of program, right?
Right.
There's different factors involved in an adjustable rate. You know, what they're basing it on, how high it could be capped.
Well, it usually has a margins, right? And they have a lifetime.
Well, there's a margin and a cap,
And-
right?
yeah.
That's right.
Right.
So the margin, it used to be the 1-year Treasury. Now it's they have a new index. It's like this. It's all these index all together, and it's changes every 6 months now. After, so I'll give you an example. Let's say a 5-6 arm. So it's fixed for 5 years. Usually, and today it's probably around 4%. Let's say the current 30-year fixed rate is 5%. So right off the bat, you get a percent lower. So it's fixed for 5 years, and then when that first adjustment comes, usually every lender is a little different. That next adjustment could be a cap of 2% from the start rate. Sometimes, some of them I've seen, that first cap adjustment could be 5% above the start rate.
So that's actually our point. You gotta compare what one adjustable rate is as opposed.
And you also have to know what you're doing with that mortgage, right?
Yeah.
Because if you're going to stay in the house for 3 years, it would make sense to grab it at 4%. But if you're going to stay in it longer than 5 years, you want to think about what would happen in the 5 years, and it jumps up.
Right.
This is starting to sound more and more like loan sharking to me.
Yeah.
Or a casino.
Well, I think it is. It's legal loan sharking.
Yeah.
Yeah.
No, probably more like striped bass.
Not quite sharp? No. You know, with the summer, I don't know if we've talked about this. This is my favorite thing about the summer. When, we start with shark sightings.
Oh, yeah.
This is, as soon as the temperature goes over 80, everyone's seeing sharks everywhere.
Yeah.
Right.
And it's on the news. And,
Right.
and you go, well, where are you seeing these sharks? And they go, in the ocean. I go,
Really?
yeah, I'm not that surprised. I don't see how that becomes news. You know what I mean? If somebody got bit on the median strip on 128 by a shark, I want to hear about that. You
I don't know, didn't you have a boating accident on Route 128 at one point?
Did I?
No, he can't remember. He can't remember his jokes.
No, I don't.
I thought it was true.
We remember your jokes.
What was that
You
joke?
drove into a boat or something.
Oh, I hit a boat.
Yeah. On 128.
On 128.
You weren't driving the bus, right?
No. I rear-ended a boat.
And they said you have an accident, right? A boating accident.
A boating
right?
accident.
Where did it happen?
128. Yeah.
So we've done a lot of serious talking.
I hate that.
I know.
I know you do.
I
so,
do. It
Tony,
makes me nervous.
I think I know where you're going to be at 8:00 tomorrow morning.
I am doing Kiss 108.
My favorite.
Yeah.
And
Oh,
I
sweet.
said,
Yeah,
I'm going to be late for work
Yeah,
again.
you know what that means? I got to get up at fucking 8 o'clock in the morning. That's what that means.
No, you got to get up earlier than
Oh,
8.
I got to get there at 8, right?
Yeah, you got to
Oh,
be
you
there.
don't
Yeah.
call it
in
in.
studio.
No, I'm going in studio. Yeah.
And you're
And
promoting
Maddie-
a couple shows on this weekend.
Yeah,
at
I'm
Giggles
at
Comedy.
Giggles
Where is
Comedy
that
Club.
anyway?
It's
Where's
at
Giggles?
Route 1 Southbound.
Yeah.
Oh, I
Best
love
club,
that.
Route 1
Love
Southbound,
Southbound.
Saugus.
Yep.
How come Southbound does so better than
It's
Northbound?
it's more forgiving. It's northbound. I'm not so happy with on Route 1.
No.
I'm not happy with Route 1 at all.
At all,
It's,
no.
you take
Remember
your,
Waylu's on North?
Sure.
Oh, boy.
Isn't
take
the
your life in
carcass-
your hands.
Is the carcass still there?
Oh, yeah.
Yeah.
Oh, yeah.
Yeah.
So you're
I'll be
promoting...
at Giggles this
Friday?
and Saturday.
Yep.
Yeah. Thursday night
Who's
I'm
the
at
gentleman who owns or runs...
Mike Clark.
Clark.
Mike, fine human.
Yeah.
Fine human being.
He certainly
Brother Lenny.
is.
Yeah.
Is that Lenny's brother?
That's Lenny Clark's brother.
What are you throwing him softballs? He doesn't need softballs.
I do. Thursday night, tomorrow night, I'll be at the
well,
Sam
that's
Adams.
Wednesday.
Oh,
Wednesday.
Thursday then.
Thursday.
Tomorrow.
No.
Thursday's the day after tomorrow.
We did so well for 14 minutes.
God, my head hurts now.
I know.
And then August 21st.
No, so where are you going to be on Thursday?
At the Sam Adams Tap Room
In,
Faneuil Hall.
Oh,
Yeah.
can we go visit you there?
Yeah.
What are
Jimmy
you doing
Dunn,
there?
My buddy Jimmy Dunn has a show there
What time?
at 8 o'clock.
Is there drinking involved?
It's a tap room.
Okay. Don't
I
have
think
to
you
yell
sit-
at me.
I think you sit on kegs.
Oh,
Yeah, I think they just have a hose that comes from under your seat.
Oh,
that's perfect.
Just squirt Sam Adams right in your face.
I thought the crowd was tapped.
Well, that too. It's it's the young people, so it's always a.
And where's
crapshoot
August?
for me.
Where are you going to be August 21st? That all of us are going to be
To the
at.
best of my knowledge, I will be at Fenway Park.
You,
Wait a minute.
You up first, second? You lead off hitter?
I'm yeah.
What do you mean to the
I'm
best
batting
of your
first.
knowledge?
We
have tickets.
Lot could go up, be wrong. I'm about a week away from death's door always, so.
I'll be
Can you
looking-
hang in there till the 21st?
I know.
Because we have
My
a lot
best.
of tickets.
Listen, the way my year's going, I suspect I'll be dead by October. So
October.
I got movies. I won a SAG award. I'm in an Academy Award winning
Oh, so
movie.
you think things
There's
are going to
the new-
average off?
Yeah.
Oh, the
Doing
pendulum's
well.
coming. Yeah.
I have.
Oh, I see.
I have a famous story about a guy who his whole dream in life was to bowl a 300,
Yeah.
a perfect score.
Yeah.
He bowled that 300 and dropped dead 2 days later.
No way.
Yes, it's an actual story. You can look it up.
I'm gonna.
So my first thought is this:
Don't
set
bowl
your
a
goals higher.
Yeah.
You know what I mean?
Because you're going
And
to die
then-
right afterwards.
Right, because whatever
as soon as I
they
shoot
are,
a 310,
right?
then
boom,
you can take me.
Right.
Okay.
Right.
So
All right.
you should set them so that you can't reach them.
You can't reach them.
Right.
Right.
All right.
And then strive for the middle, and then you'll end up like me.
Okay.
But I am among. It came. It
You brought this on.
with everything
know.
that's happened. I have come to this conclusion about me. I am the character in Bull Durham. Kevin Costner's
the actual
character.
guy. Yeah.
Kevin Costner's character.
Oh, you're right.
Yeah.
Yeah, I like
you know what
that.
I mean?
Yeah, yeah.
I have all these friends who I send off to do very important, famous things.
And you stay in the minor
I stay in the
leagues.
minor leagues, breaking home run records, and no one gives a shit.
No, but we do.
And
I
you
know you
marry
do.
Susan Clarendon or whatever.
Yeah.
Yeah, whatever.
Sarandon.
Sarandon.
Yeah.
And
Yeah. I'm happy with my life, but I'm just saying I have these things, but it doesn't matter.
You're like the stepping stone for
And
everyone.
yet I am among a growing population of Americans that I think is way overlooked, which is the second homeless.
What does that mean?
I don't have a
He doesn't
second
have a
home.
second home.
I do
Oh,
not.
second homeless.
Second homeless, yes.
I thought
I
that-
don't.
okay.
I can't afford a little place out by a lake or on the Cape or a beach, and it's
So you want a fun
tragedy.
starter for you to help
Yeah,
you out with
let's
do a
do a
GoFundMe,
Kickstarter, a
yeah.
GoFundMe to
Yeah.
get me a second home.
I can see what
we're a very overlooked part of
I
the
can see
population.
the name of this show today is going to be Help Out the Second Homeless.
Second home.
I think you need a
Second.
second home in Aruba.
I'm going to Aruba on August 1st.
I was wondering. I thought it
Are
was
you going in
August.
February at all?
Yeah,
Okay. I think
Rick's
we should-
going with you.
Yeah,
I think we should all go visit
I
you.
think you should come.
Oh, can I have another vacation?
You come right on.
It's a
I got
beginning of a start of a new year.
I got a palapa with your name on it.
That's awesome.
You know, you can't roll these vacations over to the following year.
I know I can't. That's why I got to get it all in.
These notes are so bad they've been upside down the whole time. We haven't given it a shot. All right.
All right,
go
so
back to
I only did that because Tony gets bored when we talk about real
No,
real interest rates. I thought he was gonna start laying down like that. That's what we lose, Tony. All right, you go, John.
All right, Johnny.
He's got papers.
All right, I got my notes here. Hold on.
All right.
End of quote. Repeat.
Should someone buy a house with home that they need mortgage insurance for?
Absolutely.
Okay.
You should always have mortgage insurance?
Not always, but
You don't want to have it.
Here's my theory, and I think you might back me up on this one.
Sure.
Instead of holding out for the 20%,
Yes.
buy the house, get some mortgage insurance, because historically house prices have been shooting up.
Mm-hmm.
You can very easily make up that. And
What
then-
is mortgage insurance?
John?
So, quick history.
Well, no.
Oh no.
All right, basically, it's like gap insurance.
Where's the
for housing.
hook, Chrissy? Where's the hook?
No one knows what gap insurance is.
You know, like in a car, you know, if you buy a car, new, it's $30,000, and if you get into an accident, now they say it's worth $26,000,
right.
And then that other $4,000 you have to come up with.
Yeah.
And then they have this thing called gap insurance, which would cover that.
Yeah, I see.
All right, let me give you.
So now mortgage insurance.
Okay, go ahead.
So mortgage insurance is
He's
this.
got it.
Typically, the old days was you got to put 20% down.
Right.
All right. And that was no other way to buy a house unless it was.
You had to have 20%.
Right. So then the mortgage insurance companies, these private mortgage insurance companies, said, "Look, we will insure. Let's say the house was $100,000, and you put a mortgage of $90,000, right? So that's
10%.
The mortgage insurance company says, "Look,
Thank you.
if the house gets
Show off.
foreclosed, and we end up selling it for $80,000, we get like a $10,000 shortfall. We will insure the lender that extra.
Oh, I see.
So it's really insurance for the
So
lender.
when do you
Right.
need it and when do you don't
When
need
you
it?
don't put, is it still 80%?
It is.
Yeah. So when you don't have 20% to put down toward the house,
Say you have 10 or
yes. If you have 10%, you get mortgage insurance.
for how much? For,
Well,
for the whole thing or for just that
Just
10,
the difference.
The gap.
It's a great question. So with that,
I had a great question.
it was an awesome
very-
question.
no, that's-
So the fact that what you pay in mortgage
Let's
insurance,
just stop right now.
credit scores, FICO scores,
Go! FICO yourself!
come into a huge factor.
I just blew Chris's eardrums out.
It wasn't me this time.
It's just a little bit of blood. It's fine. It's fine. I'm okay.
You know, people always ask me, they said, how can I find out my FICO score?
And you tell them to go FICO themselves?
All the time.
Oh, I'm gonna have to run out.
Tony, that's awesome.
I'm gonna have to run out of and save that one again.
Oh my
I told
God.
you the time when we were trying to reserve that.
Yeah.
So go FICO yourself.
He calls up the.
So
yeah.
I called up like Network Solutions and I save it quickly because I know everyone was going to jump on it. But then like a week later, I said, "This is actually Tony's idea, so I should reserve it
Switch
under
it,
his
yeah.
name." So I call up Network Solutions, say I'd like to transfer a name over to someone else. And they go, all right, we can probably do that. What's the name of the company? I say, well, go FICO yourself. And I think I got a hang up right after that. So
yeah.
No, the guy there's silence, and that's never good.
It's definitely the title of today's show. How to
So-
go FICO yourself.
So Tony,
There it
are
is.
you going to use that joke at Fenway?
Oh, yeah. Huge real estate.
all right,
crowd.
let us get it reserved before
Yeah.
that because I know a lot of people will be looking at
I
it.
thought you have it reserved.
Well, I think if you don't renew it, so I better look after today.
I can't believe we don't have that. You don't have that somewhere on
We
your
We had it.
website.
I know. We should have
Oh.
on our website.
Yeah.
To look up your own.
FICO scores, yeah.
Yeah, go FICO yourself. Sure, why not?
Yeah, I've wanted to change my business cards to
All right,
like
so
to
get
some
that on there.
things. No,
Yeah.
and Rick's like, do you really want to put that on your business card? I got the GFY thing going.
How much does credit scores? How's it hurting people these days or helping? Like, what's a good credit score these days to get an A loan?
Well, to get an A loan, you're probably as low as 680, but the best FICO score would be 740. or greater would be.
Okay.
You get like the best score.
Okay.
720 is good. Once you start dropping below that, and it's not so much the rate.
But does it really? I was just gonna say, does it really change the rate at all?
Slightly. However,
I never really. Okay.
What usually sometimes it might make the difference between getting the loan approved or not. You know, if someone
That's how I see it.
if
yeah.
someone's putting 5% down and their credit score is below 680, a lot of times it doesn't.
It
get
shows
approved.
that they're not financially
Right.
sound.
And then I end up having to switch it to like an FHA loan, which is a lot more lenient. We can go as low as 580 for the credit score.
Right.
So I find that being the case.
But do you
What's
see
a really
a lot
bad-
of bad credit scores?
Yeah, what's a really bad? Like, is 2 bad? 2 sounds like a.
Sounds like a great
Especially
number.
when you get 200
Right.
just to apply. It's
Right,
like an
just
SAT
right.
exam.
What's your credit score?
Well, 2 would be
2.
that would be a full-time job to get that bad.
Well, then you do qualify.
You have to move in. You have to move in with somebody.
That's his best thing on these credit scores. He does have a full-time job.
So what I find is a lot of what brings down the scores the most is someone could make the payments on time, but they might max out on their credit cards. And sometimes I'll see a limit of maybe $500, so it doesn't take much to max out, and that brings the score way down.
Right.
And I'll do a credit simulator and say, hey, if you pay these down to like $100 on each card, the score will shoot up like 80 points.
Wow.
Yeah,
Wow.
just like that.
So, but also if you have, say you have a credit card limit of like 40,000.
Yeah.
And isn't there a percentage, like if you
I'd
have,
like to have
25%.
her credit card.
Yeah.
Yeah, exactly.
No, but I bet you Kathy's good with money.
Oh, she's good with my money.
Yeah.
Yeah.
Not hers.
Don't snarl at me. All right. So I think
I
this
wasn't snarling
This is
at
what you
you.
get to. So
no, you
if
said 25%, so 25% of 40,000, you should keep it under that.
Yep.
So
Yeah, keep it under 10,000.
So do some people get a second credit card and just have 10,000 on each?
They do that, or sometimes I'll tell them to call the credit card company and get an increase in limit. That'll do it too.
Yeah.
Bring up the,
Yeah.
bring down the
difference.
percentage. Yeah.
Yeah, but I always thought that if you had a higher limit, it was harder to get a loan because you're hanging out there in the wind with that. Okay,
No.
is that like old school thinking?
I think so.
Was it?
Yeah.
It was probably something back.
I bet you
in,
if when they were doing manual underwrite, they would probably look at that.
Yeah. Okay.
Yeah.
So that's a little.
But I will
thing.
say, if you try to get another credit card and you have all these high limits, you might not get another credit card because they will look at that.
Right. Right.
Definitely.
I tell you about the credit card I got a couple years ago. I didn't have my Social Security number.
Well, I did that.
I know. She didn't do it on purpose. She gave my wrong Social Security number. She was setting up a.
They sent the card.
I sent a card and it was like for $10,000. I said, "That's lousy. $10,000. I thought I'd get
because you
better."
don't have
Because it's not even my
a
credit.
Social
It's not even my Social Security. It wasn't even me.
Now, what happened if you could have spent that money
I know.
and they wouldn't have found you?
Yeah, exactly.
Right.
We were nice about it. We
Yeah.
said, I think there's a little bit of a
messed up
problem
here,
here. Yeah, exactly. Yeah. So I got one question back, and then we'll jump around to because you have some information on divorce. How do you get rid of mortgage insurance?
You do it a couple ways. If you could call up the lender and
Yep.
say, hey, I think my value of my house has jumped way up, and
But they won't do this automatically, right?
they'll have you pay
Unless
for an
it's at a-
appraisal.
Yeah.
Pay for an
But
appraisal.
they won't call you up. Say, hey, Rick, we're just trying to
No,
do nice
you
Why
should
would
always
they?
know about
No.
that.
Yeah,
Right.
no, because it protects them. It's
Right.
the
Right.
insurance for them.
Right. So they're not required at a certain percentage. I think they're
Well,
required.
they are.
Right.
If you physically pay down the principal to 78%,
Yeah.
when you compared to when you first got it, under Uncle Bill Clinton's principal
Uncle
reduction,
Bill.
he great man. We all knew he was going to get away with it. We just didn't know how.
You know,
There we go.
this hurts my head.
See, I know it.
You know, you're talking to a guy who has never balanced a checkbook.
It's not that hard,
Ever.
Tony.
I know.
So
but I have never, and people always say to me, they go, well, how do you know when you run out of money? I go, oh, they'll tell you. Someone will mention it to you. You don't have any more money. Yeah, I'll get at that next month. I can't be bothered with that stuff.
What are you talking about? I got all these checks.
Can I
still
just
have
write
checks
another one?
out.
Run out of money.
I gotta write this check to pay off the other check.
No, not many people write checks anymore.
I think I'm the only person who still uses. I go
I
into
write
the
checks.
bank.
I write some checks.
Once in a while.
I go into. The
I don't
bank.
even know where my checkbook
And
is.
my bank is trying to get me to, do electronic banking, and
Yeah.
I'm not the guy you want doing that.
Right.
You know what I mean? My computer skills are.
Can I give you one tip about the electronic
Yeah.
withdrawal?
Yeah.
So we had one client whose friend ran into this because they all say, I'm just going to automatically deduct it from my account, which sounds like a great idea.
Sure.
All millennials do it because they don't like to do the
Right.
checks. The problem this guy ran into, 4 or 5 months later, he was getting foreclosure notices.
Oh, yep.
He gave him the wrong account number. And
Oh, so they were taking money out of account.
they
that
never
didn't
were able to
exist.
take it out.
Right.
And this
And
guy,
he didn't even know.
He
He
didn't
didn't
know
know.
because
was-
he assumed he had. See,
he was-
this is the problem.
Well, Tony, the tellers, just tell them you're giving them job security.
Oh, I have a private bank. I mean, I go into my bank, and I am at all times the only one in there. I'm the only one who comes here. They go, no, there's a couple other
No,
old
yeah, Rick
people.
kind of goes into
Yeah.
I go in.
But you don't want me on the computer doing. Like, I'm the kind of guy.
Oh, they'll
like,
say you can do all this on your phone. I don't want to do
I
it
don't
on my
want
phone.
it. I could. It
Right.
takes me 3 minutes to drive here. I'm
Right.
fine.
Don't worry about me.
I'm the kind
fine.
of guy on the computer. Like, I am 3 keystrokes away from scrambling jets at all times. Like, I know I'm going to be on my computer, and the phone's going to ring, and it'll be Homeland Security go, Tony, did you hit escape F23? I go, yeah, I was trying to pay my thing, and
Escape F23. Are
Well,
you trying out your
yeah,
stuff
well,
for Fenway?
you
This
just-
is awesome.
No.
I can't wait for,
Well, you just
I can't
scrambled
wait for
jets to
Fenway
Belize.
Park.
We just attacked Belize. I go, sorry, man.
Oh my God. Oh my God. All right, 5 tips for new buyers or buyers.
Or for sellers with divorces. You had
Divorce. Let's get to that.
We're
Because
gonna
that's
talk
coming.
about this.
No.
Since I saw you, I became a CDLP, Certified Divorce Lending Professional. You may ask, what is that, John?
we're about to.
Yeah.
No, you're going to tell us.
Go ahead.
All right. So what I do is I work with divorce attorneys and their clients and get them at the beginning. So help them strategize before they write up the agreement. I'll give you a couple of examples.
You don't put them back together, do you?
No, I don't do
No,
counsel.
no,
That's
no,
marriage.
Yeah.
That's
That's
Tony's.
Rick's job or
Yeah.
Tony's
Yeah.
job.
No, he gets them separately in different rooms. Goes, yeah, he's a pain in the ass. And then he gets the other one. How did you marry her?
Yeah.
You both should refinance.
That's right.
You know.
Go ahead.
Well, I did learn. You know, the number one cause of divorces. I'll give you a hint. Begins with M. What's the number one cause of divorce?
Money.
Being married.
Money.
Being married. You got
Okay.
it.
That's
Yeah,
it.
marriage.
Marriage.
Is the number one cause
Yeah.
of divorce. It is. You know,
You make a good point. Can't argue with that.
Yeah.
I think it was Groucho Marx. He said, "Are you happy or are you married?"
Yeah.
Anyways, so
Anywho.
yeah. So I mean, I had this couple in the beginning. They, like right off the bat, they just want to like separate everything, start selling off all their assets. And this one couple had a second home in Plymouth. And I said,
Second home lucky.
Hopefully the wife got it.
well, I said to them, you're gonna sell the second home. You're gonna pay all this capital gains tax. I
Right.
go, you live in the city. You know, the husband. I go, why don't you live there for 2 years, make that your primary residence,
Yep. And then sell it.
Yes, and that's what they did. They saved a boatload of money on there.
Is that legal?
It
Yeah.
is absolutely.
If
Little
they got
loophole.
divorced, they're not living in the same
See,
place.
Yeah.
And they both had primary residences.
Yes, and then
But they owned it jointly still.
they did.
Yeah.
that's right. And but then when they sold it, they paid a lot less capital gains.
Oh, that's great.
Yeah.
You're like a financial planner.
Well, and then I had a,
Genius.
Good for
well, here's
you. You're
another
a
one.
divorce counselor.
Yeah.
Yeah, you do it all.
Everything. Yeah,
Yeah.
I do it all. I do. And I had another
He just
situation
wants to give people money. Is that a bad thing?
where typically,
saint.
all right, this is my time.
No, I'm
Go ahead.
so
Yeah,
sorry.
go
You're
ahead.
right. You're right.
My time.
My time.
I didn't know we all had little
All right,
times.
well,
I had my time.
Go.
Go ahead.
I haven't had my time. Go ahead.
You'll have your chance. No. The husband said, "Listen, instead of giving you a monthly, alimony, I'm going to give you a lump sum, like $500,000. Let's call it a day." So everyone said, "All right, that works for us." But in terms of her, she wanted to get a mortgage. So now she had no income coming in on a monthly basis. Yeah, she had the $500,000. So what I did was we took the $500,000, we put it in a trust, and we had a trustee state and give one distribution of like $7,000 a month. All we needed was one distribution, and I got to use that $7,000 to have her qualify.
Wow.
Yeah, where traditionally someone would make, let's say the guy's going to give her $7,000 a month as part of the settlement, we would have to show 6 months payment.
Right.
if they were going to do it that way.
So she couldn't. They'd have to wait 6
But
months.
with the
before.
trust, that's a guarantee.
Yep, guarantee as long because we could demonstrate that it would last at least 3 years. So
Wow.
we're able to do something.
So you're
like
doing
that.
some creative thinking outside the box to help people
Absolutely.
either stay in their home after a divorce or figure out how to get around it.
Yeah, that's right. You know, and a lot of it's like, you know, because let's say take debt for example. Let's say the person can't get off the mortgage. Right now they have a nice low interest rate. They might
Right.
not want to. So I'll say as long as you put in the decree that the wife is responsible
for the
payment,
debt.
as long as it's there, that will still stay on his credit report, assuming the payments are paid on time. When that person goes for a mortgage, I don't have to debt him for that that mortgage.
Because it's in the divorce decree. And if
Correct.
she stops paying the mortgage, then that's
It will affect his credit.
right.
Whereas if they didn't put it in there, then I'd have to wait 12 months, show 12 months payments were made.
So is that
on time.
just for married couples or father and son? Son's buying a truck or something like that?
So here's the thing on that one.
Okay.
And for student loans, I tell people, and this is where people make a mistake. Let's say the parents pay the student loan, and they're paying
So
the
that
student.
check should be out of the son's account.
It should
right?
be out of the son's account, but where they make the mistake is they'll be the parents will be on the son's account. It's joint, and I'll say
Okay.
it has to be separate. Son has to
Yeah.
have his own
Right,
separate
right,
account. So
right.
for car loans, if you show that 12 months payment out of that account, we no longer have to debt them for any of that debt, whether it's a
Okay.
car loan or a student loan.
Wow.
Yeah, that's huge in terms
is
of like.
huge.
You have a.
How
You
do
have
you
a.
remember all this?
I know. I was going to say, John.
End of quote. Repeat.
All right, we gotta go. We gotta go.
I know. We did pretty good there. All right, Johnny, as Kathy said, give us three quick tips for buyers or borrowers or.
Buyers.
Well, actually, I got a question for the legal beagles right here. I
Okay.
got
Tony?
questions
I'm
for
ready.
you.
Tony?
Okay.
Let me get in my ready position.
It has to do with the difference between a quitclaim deed and a warranty deed.
I can answer that.
And what's the advantage of one, and what's the difference in protection one versus the other?
Well,
Look at you, Johnny, with
I
the
know.
legal question.
I wonder if we should have John on again, because it's
John, you
not
wanna-
a quick answer.
John, why don't you come on again?
All right,
Will you come up with your 10 best legal questions you want to ask us?
Typically in Massachusetts,
Yep.
you get a quitclaim deed.
That's it.
Yeah.
And is there a difference in protection between?
Yeah. It's you're deeding everything that you own.
Okay.
That's as
Yeah, so
simple as that.
you're not
Opposed to a warranty. What's the warranty?
The warranty
Warranty-
deed's a little scary.
warranty. It's almost like you're
You're
a
absolutely-
warranty on the title itself.
So you're
But-
deeding to the buyer, the seller's deeding to the buyer
Okay.
with warranty covenants, which means you're actually warrantying
the title.
The
the
title.
history
Whereas
of the
quick
title.
claim, it's just
So that's like an insurance. Is there an insurance policy on that, or it's
no
called
insurance policy.
So New
Just
Hampshire,
the covenants is
Yeah.
the policy.
Crapshoot.
yeah, because how do I know what you
You don't know.
Right.
You don't know.
The other
Nobody
thing that we always
knows.
get that
We
people
don't
don't
know.
understand is who signs a mortgage and who has to come to the closing if they don't, if they're only signing on the note. Do they have to come to the closing at all? But we'll discuss all this.
Wow. You know the beauty of this show?
We can
It's
turn
right
it-
there. It's right there.
Oh, I had so much other good stuff here.
But listen,
Come back.
John.
Come back.
It's perfect podcasting. We've done a great show. We've done the world a great
Right.
good.
Yeah, service.
We've
Left
them in
planning
better
this
position
in a
than
better
they are.
place.
Yeah.
And we've teased at
Yeah.
least 100 more shows with all of this.
John,
stuff.
I will
That's-
end with this.
Okay.
So
Not the crab.
no,
no, we got to go.
Crabs.
It's quite simple. People don't understand this. I have people that have they'll say they have bad credit. I'll look at it.
Give us a tease. Don't give us the answer. Give us the question.
No,
Nope.
leave him alone.
And
Go
they
ahead.
said, well, I've had extenuating circumstances. And I said, well, what's your extenuating circumstance? They said, well, I got divorced. And I said, well, listen, as sad and tragic a divorce can be, the underwriter does not look at it as an extenuating circumstance. She looks at it as a choice. You chose to be happy. That's
Whoa,
it.
all right. And with that,
Bye.
thanks for joining us here on the Real Estate House Party with Tony V.
Yes. Fenway Park.
Fenway
Get
Park,
away.
21st.
We're going to be there.
Yeah.
Kathy Holtshouser,
Hi.
who might show up next week. The Iceman, thank you
Yep.
very much. It's always very informational when you join us. Thanks for joining us. We'll see you here next week at the Real Estate House Party. Thank you for our live audience today.
All right, good crowd.
Woo, good crowd today.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21, Podcast Café, the United Podcast Network, its partners, or affiliates.